Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, September 17th, and we have got a full tour of the tech sector today, folks. We have got the CTO of Workday coming on to talk about the company's latest acquisition. We are also going to talk about a big story we published this week about how Anthropic and OpenAI are headed to the gym and what that has to do with reinforcement learning. We've then got our friends Ty Haney and Dave Morin coming on the show to talk all about consumer crypto. And last but not least, we are going to get some inside analysis of what we are seeing in the IPO window right now. It's going to be a busy show. Let's get right on into our first segment. Workday made news yesterday with a $1.1 billion acquisition of an AI agents company called Sana. The company is based in Sweden. It makes tools for law firms, mining companies, and fintech companies. I want to bring on the Workday CTO Peter Bailis to tell us more about what exactly he saw in the company. Peter, it's great to see you.
Thanks for having me.
So, look, gosh, Sweden. How did you even find Sana in the first place? I didn't know Sweden was a hotspot for AI agents.
Turns out Swedish tech is pretty good. And we got to know Sana actually originally through Workday Ventures. So Sana started in 2016 as a learning company. So Joel Hellenmark, the founder, never actually went to school after age 16, but self-taught programmer, and basically built a learning company where you use AI for learning, and that morphed into what Sana is today.
Got it. And so tell me, how is it that Sana's AI agents are different from all of the other AI agent companies that we hear about?
Yeah. So one, they're really consumer grade experience. It's a beautiful experience that Joel and team have built. I think starting from learning's a space that's pretty boring. I don't think people like to take learning classes, and somehow what they built with Sana Learning kind of from their DNA is they were going to make this an awesome experience to actually do like corporate learning and corporate.
When you say learn, I just want to make sure I understand. So AI agents and learning, how does it work? AI, the agent can't learn for you, can it?
So the company started as a learning company. So think, you're going to take your information onboarding course. You guys probably have something like that, right? So
Yeah.
Software would be an option to go and actually do that coursework and that course learning. And what they did is they made it a core part of their company to basically make this a great experience, like a beautiful experience for working with that content. So in the last couple of years, they moved over more toward the agent side, which is really search, workflows, and then sort of lower code agent building. That DNA transferred over and is really clear in the product.
Got it. So this is not the first AI agents related acquisition that Workday has made. You also acquired a company a couple months ago. What exactly is the customer experience that you are trying to build here at Workday with this technology?
Yeah. So people have a lot of opinions about the Workday customer experience, present company included. The the vision with Sana is really simple. They have probably what we think is the best user experience for working with organizational data. So doing enterprise search, getting your questions asked, creating content, consuming content. So I want to know, what's going on with my deal with Acme company. Sana will go and do that deep research against my enterprise data. So obviously there's public data, which all the foundation models are trained on. You've got great web search APIs. Sana's built the backends to go and pull into Salesforce, to go and federate into Google Drive, to go search my Outlook, to go search my Gmail, to go pull all that together. And so with Sana, you get kind of two things on top of Workday. One, for the stuff you do in Workday today, you're going to get a much better user experience, much more intuitive, much more beautiful. Two, you typically come to Workday to take time off, or you have a couple times a month max as an end user. Here it becomes a system where you think you want to come on a daily basis. The customers that have adopted the Sana Agents platform, it's basically their new tab in the browser.
Right. We've had a lot of companies on the show that have been in a similar position to you, which is that they're trying to build their own technology. They go to the market, they find something that they want to buy. It seems like every big tech company is buying now. And I guess the question I have in this environment, is it just easier to buy rather than build?
I think it's a mix. So, we look for the best things that let us accelerate our roadmap. For some of the stuff that Workday does, it's pretty deep in the platform. Like, we do 1 trillion transactions a year across people's people and money data. And that has really, really, in the guts, you've got a ton of data model, object model, transactions. It's a lot of stuff we've been working on, stuff we announced, at our annual conference this week, where you can go and say, apply Gen AI to go and optimize an internal business process, like no one really in the market's probably going to go and build that tech, but it saves, hundreds of thousands of hours for customers. When it comes to something like an experience layer, something like Sana, which is I think, kind of a new, as Joel would call it, UI for AI. That's something where we feel like, yes, we could go and build this, but what's the opportunity cost? And for us, I think the companies, especially with, recent leadership, we're extremely aggressive. Like we think there's a right to win in this, AI for work. I mean, who else is playing in this space? We could ship pretty quickly, and going to Sana is basically bringing in, more founder level energy, and also, frankly, like a complementary piece where probably could build it, but we accelerate for 18 to 24 months.
Peter, one of the questions that I wanted to ask you was Workday is sort of involved in the business of recruiting. And, recruiting is such an interesting space right now because AI, it is certainly helping to accelerate the process of recruiting. But then you hear all these stories about, well, AI is generating the resumes, and also AI can have some bias as it relates to, scanning through these resumes. And I wondered if you could talk a little bit about how at Workday you are building your technology with those problems in mind.
Yeah, it's a great question. I mean, this is, I think, true of a lot of places where people are applying AI, especially at work, right? How do you go and take advantage of these models that are really incredible at so many things, especially today, things like coding, but increasingly more on back office tasks without actually, screwing it up in the process. So we spend a lot of time, we have a whole dedicated responsible AI team. It's actually separate from our engineering team. So, keep the keep the separation of church and state. And frankly, I think what we're seeing with customers is that they're starting to realize that if you keep the human in the loop at the right places, there's a massive accelerant to go and actually, really make hiring ultimately more equitable, because you're able to look at more resumes, look at more candidates. I mean, this Paradox acquisition we mentioned, it's sort of incredible. They're doing one interview on average per second. Like
One
that's
interview per second. Oh, wow.
on their platform of the year, every single second, do 31 million interviews, right? And the scale at which they're able to go and bring candidates in is kind of insane. And you've got people like Chipotle, right? So Chipotle, reference customer, they went from 12 days on average to hire down to 4 days using Paradox.
Right.
And then at the same time, they doubled their applicant volume. So while there's definitely, you got to put the right guardrails in place, I think that AI is coming for every industry. You still leave it in the hands of a hiring manager to make the final determination, but you ultimately can do so much more. Another example I'll give you, we rolled out this performance review agent. No one likes writing performance reviews. No one really likes doing them in Workday, right? How do we make that better to go and do that? And the reality is, when you write a performance review, if you're in a rush, you're just thinking about what did I hear from this person in the last week, right? So what we do with the performance review agent is kind of like we do with Sana. You're going to suck all the information about that employee over the past year, all of your one-on-one notes, all of your OKRs, all of the documentation that you've provided, and you get a much better perspective. So I think AI done right actually is really net positive for work. It's one of the reasons why I joined the company 4 months ago.
Right.
And we basically just need to make sure we do it in a smart way where, one, it's responsible, and maybe more importantly, it actually aligns to, to what's most important for work.
Great. Well, Peter, like I said, you guys have been very acquisitive, and it's an exciting spot to be right now. So I imagine there are going to be more acquisitions. And so when you continue your spree of shopping, I guess, come back on the show and talk more about some of the companies you're buying. That is Peter Bailis, the CTO of Workday. Okay, well, one of the most interesting new dynamics in AI is the way that companies are now trying to find more creative ways of training models. And in fact, we are now seeing companies use what are called reinforcement learning gyms to fortify their products. My colleague Stephanie Palazzolo wrote a story about that this week. I want to bring her on. And I also want to bring on Jonathan Siddharth, whose company Turing also makes some of these reinforcement learning gyms, to help us explain what this is all about. Jonathan and Stephanie, it is great to have you.
Great to be here.
Great to be here. Thank you, Akash.
Okay, so Stephanie, tell us what was your story about? There's a lot going on. We're talking about gyms, not the gyms that we know about typically. Tell us about what's happening.
Totally. So basically, there's two things going on here. The first is that labs are running out of new sources of kind of large scale, high quality data. So at this point, all the labs have pretty much trained on the entire web, basically. The second thing that's going on is that labs are increasingly coming out with these agent products, which they're saying will, go on your computer or device and take actions on behalf of users, whether that's actions in your personal life, like ordering food for you on DoorDash, or in your kind of work life, so helping you make an Excel spreadsheet, for instance. And in response to both of these things, labs are getting more creative when it comes to getting training data. So part of that is, like you've mentioned, asking companies like Turing to make basically fake copies of applications. So a fake version of Salesforce, a fake version of Excel, so they can let their AI models run around in them and kind of figure out how to complete tasks in them. And those kind of fake copies of the apps are what is known as RL environments or RL gyms. And they're also getting even more advanced experts with even more higher level degrees and working experience to label data for them to improve the models on.
Got it. So, Jonathan, your company builds one of these gyms or these simulations?
That's right, Akash. And just like in a regular gyms, humans go to train. In an oral gym, these enterprise agents go to train. And once they train, you get to super intelligence. And as Steph mentioned, this is part of a broader shift to where we, in addition to learning from humans, we're getting to this paradigm where the agents learn from experience. Right? I think that's the interesting. That's one interesting aspect of this. And these oral gyms are like these mini world models for business, where the gym itself is a collection of prompts and environment and verifiers. And you need expert humans to create these prompts, create these verifiers, and create that environment. Um, and Steph's story did a really good job of making this very concrete. Where Steph, you and I discussed an example of, let's say, an investment analyst having to work through doing a DCF for, let's say, a particular investment opportunity. And to do that, you would kind of need the agent to be able to use different tools.
Right.
You need a way to verify whether the answer was correct. So we are creating thousands of these gyms across different enterprise consumer use cases. It's been a crazy build out.
Right.
And gyms, Akash, are of two types. Sometimes they are designed for computer use agents.
Right.
Meaning the model is learning how to use a keyboard and a mouse to understand what's on a graphical user interface. Or it could be a gym that's focused on function calling or tool use,
Right.
which in some ways is even cooler, which is the model calling different functions and figuring out a trajectory that results in it completing the task.
And then presumably the human in the loop would correct the agent, I guess. If they click the wrong button, or if the DCF goes, if the cells get unlinked or something like that, then the human would correct them in the loop.
That is correct. So as trajectories unfold, where the agent is trying out different paths through this space, the human can correct the trajectories, sometimes label the trajectories, sometimes nudge the model in the right way, and that data is also super valuable. This trajectory data.
So a big picture here, I just want to zoom out here. So, you have this new way of training. Stephanie, I presume, so all of this is really coming into focus because it's getting harder to train these models, right? This is really addressing this question of, is model efficiency, is it starting to plateau? We're trying to get ways to bring it back up again. Is that kind of the core challenge that we're trying to address here?
I think that's definitely a big part of it. As I mentioned, a lot of the labs, pretty much all the labs, have trained on, all of the websites out there, all the books out there. And so I think they're just coming up with new ways to continue improving models. And this is just, in the story, for instance, we mentioned that Anthropic could potentially spend up to $1 billion on these RL environments over the next year. So they are really, doubling down on this as a very promising way to continue kind of the AI improvements that we've been seeing.
Right. Jonathan, your business also sort of is in the recruiting experts to sort of help train these models. How do you think about sort of recruiting these experts and actually incentivizing them to come work for your company?
So, as Steph mentioned, these models today are fundamentally constrained by data and compute. And Akash, you might have read that story about that MIT report that said like 95% of Gen AI.
No, everyone was going crazy about it.
Everyone was going crazy.
Yeah.
Yeah, my hypothesis that one big reason that happens is that these models haven't seen enough enterprise data. And to do that, you have to hire enterprise domain experts from every field imaginable.
Right.
But Turing, what we're doing is imagine every industry in the world: healthcare, retail, life sciences, manufacturing. Imagine every function in that industry: software engineering, sales, marketing. Imagine every role in the org chart in that function. Under marketing, there will be performance marketing, SEO, product marketing. Imagine every workflow that human in that role goes through.
Right.
We're hiring all of them. Right. I truly imagine evaluating models and creating data inside even something like these oral gyms, as well as other types of data capture, will be the most popular job on earth. So we might be one of the largest employers of talent in the world in a few years. So this is a massive, massive build out. You're seeing the compute side of this, where companies like OpenAI and others, like with Stargate, we're talking about hundreds of billions of dollars in compute, right? Companies building at gigantic scale. So on the data side as well, companies need data to keep those data centers humming. And, there's this joke, Akash and Steph, in among AI circles, where somebody talks about how a researcher talks about how these models don't do a good job of reasoning when the data is out of distribution. Like, are they truly generalizing, or are they just putting patterns in the training set? And researcher 2 says, then we bring all data into distribution. Like all data, right? And to Steph's point, what has happened is the internet well has run dry. So right now there's a huge amount of interest in, number one, enterprise data. And for that, oral gyms are really, really helpful, in addition to other types of imitation learning. Number two is advanced STEM data. And the cool thing about a lot of these enterprise domains, as well as coding and STEM domains, is it's verifiable. So it lends itself very well for reinforcement learning.
Right.
Which is kind of cool. Like, I know everybody's famous.
No, finish your thought quickly.
Everyone remembers the Move 37 from AlphaGo, where again, in AlphaZero from DeepMind, the model improved by playing against itself. Oral gyms are a way for enterprise agents to play against themselves and get rapidly better.
Great. Well, Jonathan, it's a fascinating business, and I think we could probably spend hours more talking about it. Stephanie, you had a great column this morning as well, which we didn't get time to get to, but I suggest everyone goes and reads it. That's in our AI Agenda newsletter. Stephanie and Jonathan, thank you for coming on and telling us everything we need to know about the new gyms that are taking shape here in AI. That is Stephanie Palazzolo and Jonathan Siddharth. Okay, well, our next guests have spent a lot of time in the land of consumer crypto. It is not an area that we have talked too much about on this show, mostly because it hasn't got as much attention as it did a few years ago. But if no one else is talking about it, well, that in some ways is the best time to start talking about it. I want to bring on Ty Haney, the CEO of Try Your Best, and Dave Morin from Offline Ventures. It is their first time on the show. Ty and Dave, welcome to the show.
Hey.
Do you guys coordinate your like? Do you decide we're both going to wear hats on shows?
We're very blockchain. This is the look. No.
No. We're the consumer people, man.
So Ty is wearing a TYB hat, and Dave, are you wearing an Outdoor Voices hat? I mean, is that how you get the best of both brands?
No, I should be though.
Okay. Well, look, I have to say, I want to talk about consumer crypto, and that's what I reached out to you guys saying, let's talk about it. Ty, I was living under a rock. I didn't know that you are back at OV as of 2 months ago.
Yes, new news. OV, the first company, and then into 2IB, which I'm still running, and then most recently rejoined OV. So very full circle and very focused on world building at the center of this community commerce opportunity.
And just, share us here very briefly. What is your sort of 18-month vision here for OV, broadly speaking?
It's the same as when I started, build the number one recreation brand, and that has opportunity to be well over $1 billion business. Dave was part of that in chapter 1, has been part of 2IB, and now again part of it in chapter 2. And so 2IB is fundamentally the tool that drives this model we call community commerce, which is on chain. We can get into details there. But that's that's a big catalyst for how we build this billion-dollar recreation brand.
And talk about, so let's talk about TYB now. What exactly is the core problem that you see the company solving here?
Yeah, 100%. So consumer has a relationship issue. Essentially, we, for the last 10 years, have spent a lot of money on Instagram and Facebook to acquire customers that don't stick with us. CAC has exploded. There's been no like default tool for driving LTV and really longevity of these relationships and value of a customer over time. And so that's where TYB comes in. It's a community engagement and rewards platform that acts in a game in a way to allow brands to nurture relationships with their fans and customers and ultimately make them more valuable over time.
And so tactically, I mean, so just paint the customer experience here for me. So I go to, I saw on your website, you've got like Urban Outfitters, for example. So I go shop at Urban Outfitters and, maybe I want to buy the cool records that they have on display or something like that. And then, so what happens with the rewards? I sign up for a reward. How does it work?
Yeah, so I'm a fan of Glossier. I'm prompted to join Glossier on TYB. I start to engage in these various challenges, things that as a consumer are very natural and I already do, but I'm not rewarded for them. And so really TYB becomes this one portal in on the consumer side to rewards and relationships from brands, so multiple brands all in one experience, versus traditional loyalty programs live on a brand's site. And so for me to think about my parade coins and then when to use them, it's not all that relevant. So one portal into rewards and relationships across various brands is really what this phase one of TYB turns on.
Okay.
And our belief is the future of loyalty is all about identity, status, and your proof of fan. And so
this is like posting, like if I post about the brand, then I can get rewarded for it in crypto, essentially.
Well, essentially, like I'm entering this game, I'm engaging, I'm earning, and I'm progressively leveling up with this brand's tiers. And then that tier within Glossier can mean something within Nike. And so status becomes interoperable. But at the end of the day, really what, from a TYB perspective, we're helping brands and consumers create is this idea of an on-chain consumer identity.
Got it.
That's an identity that I take with me and means something, unlocks various perks, access to things, etc.
Got it. And Dave, I'm coming to you in just a second to talk about the industry more broadly. But last question, Ty, on this topic here: what is the business model for TYB?
Yeah, first phase has been B2B. So annual contracts will quickly move into this more community consumer monetized opportunity as we turn on customer as affiliate. And so that's a phase we're stepping into right now as we've gotten well over 1 million members and high value members on platform.
Got it. So Dave, we heard a lot about consumer crypto a couple years ago with like NFTs, for example, and Web3, it felt like people stopped talking about it, but you have continued to invest in the category. So give us a little bit of the lay of the land here. I mean, what are you seeing in terms of what startups are most attractive to you, and like what should we be paying attention to as it relates to consumer crypto more broadly?
Yeah, on the consumer crypto side, we've seen a real focus on real world use cases. How do you take something, put it on chain that is connected to the real world? And in the case of what Ty is building at TYB, like she said, CAC has exploded. It costs more than ever to acquire a customer. And generating loyalty amongst those customers has also been largely elusive to most of the great brands in the world. And so the idea that you can convert this internet phenomenon of people becoming fans of things, of people spreading memes about what they love the most, into loyalty to a brand and a higher LTV is a really powerful, I think, use of crypto. And so, more broadly, I think what we're seeing is this era of mimetic finance, where financial assets are spreading like memes. Financial assets have become culture,
We see that.
Sorry?
Actually, we see that. It's it's happening everywhere.
Yeah, and so memes are market signals. Culture is the leading indicator. What people want to become a fan of, what they want to spread through social networking systems. That is their identity more than ever. We've been saying that since the beginning of the consumer internet. When I was first working on the earliest social networks, like we always said that identity is everything. But what you see today is this is spread not just from the internet, but into financial assets and all matter of things. And crypto is right at the dead center of this. Over the last year, we've seen a massive explosion in usage of Solana and meme coins. And a lot of people think it's silly, just like, the stuff was going on with NFTs. But what I see is that consumers are engaging in cultural actions in a way that is incredibly powerful across the internet and financial ecosystem.
Right.
And so when you look at what we're doing with TYB, it's really bringing all of that together to just like radically increase the LTV for brands.
So Ty, how do you think about this idea that, some percentage of the world has used crypto now? I don't know what the number is, but, I imagine it's some percent. It might not be a lot, but it's growing. But my question for you is how you think about adoption about crypto broadly, because you could make the argument that, hey, if people haven't used crypto in the first place, why would they want rewards in crypto? Why would they, want to sign up for a program like this? You could also make the flip side of the argument that, well, this is how we're getting them into crypto. Like, how do you think about adoption and the chicken and the egg in terms of like where you sit in that and getting people to use the cryptocurrencies?
Yeah, it's really just blockchain, the underlying technology here. What we've done on the user experience is really obfuscate that, but really create these magic moments around value creation opportunities, which is really kind of what I care about from a blockchain perspective. And my perspective is there's going to be this massive, and already we're seeing this turn on, kind of value creation opportunity powered by blockchain and crypto. And if we don't get women here, they're going to miss out on an entire kind of 10-year, decade-long value creation opportunity. And so brands are a really nice way to attract female audience into crypto. And I think personally, that's what I care most about.
Talk more about how, some of the programs you're putting in place to sort of play out that mission.
Yeah, I mean, the beauty of the business today is brands, when they engage their customers in this TYB game, ultimately they become more valuable over time. We see that through frequency of purchase and then LTV. We integrate with Shopify. So what's quite interesting is we can start to compare the engagement behavior between TYB members and then non-members, and ultimately point to kind of what engagement increases that value. And so for the first time, community becomes measurable. So all that kind of connected to why brands want to be on the platform. And then those brands naturally bring these fans into this ecosystem where for the first time, they're being rewarded for this engagement and ultimately their loyalty in a way that's really relevant and rewarding.
Dave, last question for you. In this realm of consumer crypto, what other types of businesses are coming across your desk right now that you are finding intriguing, that we should be watching to make news in the months to come?
Yeah, I mean, we are really focused on the Solana ecosystem. Solana has the most developer activity, the most interesting creative stuff going on. And so we've been, very focused there right now.
Okay. And so focused there, but like, what types of businesses are you sort of paying most attention to?
There's a bunch of interesting stuff going on, prediction markets, fantasy sports, just like TYB. On the consumer side, we are most interested in consumer experiences where the consumer really has no idea that crypto is the underlying technology driving the experience, but is a super empowering, technology that enables the experience. With TYB, it's really a Trojan horse. People use it; they earn points and rewards for engaging with their favorite brands. And, sooner or later, you're going to be able to trade those things. And the consumer really has no idea. It's just enabling something that people have always wanted to do. We've all always had airline points and points of all different kinds, but you've never been able to exchange them across, to become higher status in a different brand. And so all of that's empowered by crypto. And we see this going on, across some of these other categories as well in consumer. And we think that's the way that consumer is going to go. The consumer doesn't need to know about it.
Great. Well, Ty and Dave, thank you so much for coming on the show. I imagine we'll have you guys both on more and more as there is more news to discuss. But
always happy to be here.
Congrats on all the great work. And Dave, we'll see what hat you're wearing next time. I think Ty can probably give you something a little bit more branded than that one. But anyway, thanks for being here, both of you. That is Ty and Dave. Okay. Well, IPOs are back. This month, we will see 6 venture-backed companies take to the public markets, including Netscope and StubHub, which are debuting today. The question now will be, are these IPOs enough to pay out the many venture funds that are sitting around waiting for exits and waiting for returns? I want to bring on our Deputy Bureau Chief, Katie Roof, and the CEO of Industry Ventures, Hans Swildens, to give us an answer to that question. Katie and Hans, welcome to you both.
Great to be back.
Okay, so Katie, we have got Netscope and StubHub today. What do we need to know about these 2 IPOs?
Sure. So StubHub begins trading today, and Netscope prices after the bell today. They're both very different. Netscope is more of your typical venture-backed IPO in terms of ownership. They have Lightspeed and Excel and Iconic, whereas StubHub is a 25-year-old business that was acquired twice. It was already public as part of eBay at one point. So, but it's still venture-backed because Bessemer owns part of it. Same with Westcap.
Right. So Hans, why now? I mean, we see, I think the number in Katie's story was 6 venture-backed tech IPOs is the most we've seen since November of 2021. And so why do you think this is the moment? I mean, is the IPO window open?
Yeah, the IPO window's been open for a while. It's been open for a couple of years. There are more IPOs going right now than all of 2022 and all of 2023, basically, because there was 2 and 6 in those years. But I think the market's at an all-time high. There's demand on the buy side for IPOs. A lot of the IPOs that priced recently have performed well, and so you have momentum. And when momentum's in the IPO market, it accelerates. So that's not surprising. We're seeing acceleration.
And so talk to me about what venture LPs are saying. Are they celebrating? Are they cautiously optimistic? Are they saying, well, this is still not enough to sort of get us the returns we wanted? Hans, how are they thinking about that?
Yeah, I mean, we're kind of unique as a firm just because we have a very large LP portfolio. There's over 750 fund stakes that we own in 350 firms. And so we've got one of the larger venture fund portfolios in the US as an LP. And I would say we're not celebrating, but it's a really nice thing to have, right? I mean, I think that there is a lockup on all these shares. We're still getting distributions from old IPOs 3 years ago, 4 years ago, where the venture funds have been locked up due to them being on the board and they're distributing. But I would say it'll be a lot better once the lockups are off, and then the venture funds either distribute or sell these so that it can get some distributions.
Right.
So celebrate. When a company goes public, most of the time you don't get all your proceeds right up front because they
right. You got to wait.
I would say it's a 2026 celebration.
Right. So Katie, Hans is saying 2026. Talk to me a little bit about how the secondary markets have evolved as a way to get liquidity for, investors that have been waiting for this window.
Right. You see companies like SpaceX and Stripe having very active secondary markets, and then also doing a lot of company sanctioned tender offers as a way for insiders to sell their shares and not have to wait for an IPO to buy a house. But that also means that there's less pressure for them to go public, which is part of why we're not seeing so many IPOs.
Hans, join in here. I mean, you've tracked the secondary markets pretty extensively. What have you been seeing?
Yeah, we have one of the largest secondary funds here, and one of the largest secondary teams. And it's $1.5 billion secondary fund we're investing right now. And so we're in all that deal flow, and looking at all those transactions and participating in some of them. I would say that there is a barbell. So there are companies that are staying private and have no plans to go public, and they're using the secondary market for liquidity. That's been going on for a while. And we don't see that as changing much in the future. A lot of the IPOs you're seeing that are coming out now are not the top 10 market cap private companies, and the top 10 or 20, we call them the PMEG, the private MEG companies. it's unclear whether or not they're going to go public, and if so, when. And so the secondary market's providing liquidity in those names, and those CEOs and boards have been very happy with using the secondary market for a means for liquidity for the employees as well as the shareholders. So it's a super active time.
Hans, last question for you before we go. I'm curious what you've made of sort of the financial performance and the fundamentals of the companies that have gone public this year. For a while, it was that the bar was getting pretty high in terms of profitability, revenue. I mean, you had to be really an A+ company to take to the public markets. How have we seen that bar shift, if at all, with the companies we're seeing go public this month? Can you kind of get away with being a company that hasn't proven as much in the way of profitability or anything like that?
Yeah, the capital markets move, right? So, 10, 20 years ago, most of the companies that would go public were unprofitable, but they were at fast growth. And then we get a period of time where you had to be extremely profitable and fast growth, and have a rule of 40 or more, which is the addition of the growth rate and the profitability. But today, I think you're seeing with AI and some other technology tailwinds that the bar's lowered to include companies in certain sectors that have big burn rates or are not profitable but show fast growth and are more speculative. So I think the venture business is extremely speculative, as everyone knows, and the IPO market over the last 3 years has not been very speculative. And I think we're starting to see some speculative nature of some of these investments show up in the public markets.
Great. Well, it certainly is something to watch. And as you said, the more speculative they get, often the more volatile they get. And that means
on the upside and the downside, right?
Yeah, upside, downside. Either way, it means there's news, and that means there's more for us to talk about. So, Hans, we look forward to having you more on the show to talk about some of those movements. And Katie, I think we'll have you on the show more and more because more IPOs means more things to scoop here at The Information. So thank you both for coming on. That is Katie Roof, our Deputy Bureau Chief, and Hans from Industry Ventures. Okay, well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. And so until then, bye-bye for now.